Joining me now in a Fox Business exclusive is Wells Fargo Chairman, CEO, and President, John Stumpf. John, good to see you. Thanks so much for joining us.
Pleasure.
What are your thoughts on Hillary's op-ed this morning and on the regulatory environment as it stands today and how she would like to change it?
Well, first of all, we're a real economy bank. So we deal, on Main Street, on the back 40, with ranchers, farmers, small businessmen and women, and large companies. And the policy statements, it's always the devil's in the details. I'm in favor of anything that helps grow the U.S. economy. Makes it easier for us to lend more money to more consumers, helping them succeed financially. So, again, it's just an op-ed kind of thing. The one thing I was interested, though, was taxes. We are the second highest taxpayer in the U.S. as a corporation. Last year we paid over 31% of our earnings in taxes, over $7 billion. So, and that's not unique for us. Our industry pays a lot in taxes in the U.S.
Yeah, and when you look at actually the voting public, I believe it's more than 60% of people want to see tax reform as number one issue.
In fact, it's not. Tax reform is not helpful to the economy. I mean, taxes today are not helpful. We need tax reform to help grow jobs in the U.S.
Yeah. So does the fact that you are really a Main Street, plain vanilla bank, I mean, for the most part, when you compare yours to somebody like a J.P. Morgan, does that give you a little more flexibility in terms of, I feel like it has given you flexibility in terms of the dividend, allowing Wells to...
Well, the risk profile is lower.
Yeah.
97% of what we do is here. Virtually everything we do is with a customer. So that's our go-to-market strategy. Everything's about relationships. So there is less risk, just based on our GSIB buffer, which is recognized by our regulators. So it's a simpler business model.
But still, I mean, regulators are emphasizing more rigorous capital, and the regulatory burden certainly is higher for the top 8 banks relative to the rest. Earlier, we spoke with the CEO of BNC, and the fact is you're competing with all banks for that deposit dollar of consumers. And here in the Journal this morning, one of the top stories: the Federal Reserve revamping the way it oversees bank stress tests after reviews found fault in how the regulator handled exams. So the bottom line is you've got to compete with everybody, and yet because you're the size that you are, the burden is still heftier. Does that become a barrier for you?
Yeah, there is a higher threshold. We have to hold more capital, more liquidity.
You're going to be lending out that money.
Exactly, and TLAC. So that's all on the cost side. On the benefit side is having a national franchise. We are where our customers want to do business. In fact, the last years, since the crisis, our growth has been stronger than it's been in the 35 years I've been at the company. So there's a plus and minus. Now, we can't get too high on the cost side with capital and so forth, but so far we're making it work.
I want to ask you about these marketplace lenders, but since you brought up growth, let's talk about growth for 2016. What you're expecting in terms of loan growth? You're the largest in terms of mortgages, the largest in terms of auto loans. What are you seeing in 2016?
Actually, I think the economy will be slightly better than what people are thinking, or slightly better than what the numbers have been showing now. You think about it, we're at a 5% unemployment rate. Next year we're going to get into the 4s. That hasn't happened but maybe once or twice in my 40 years in the industry.
Wow.
The gas tax, so-called, or the gas benefit from the prices down has not yet been all spent. Balance sheets for consumers are being cleaned up. Autos, we had 3 months in a row where the annualized sales of new vehicles was over 18 million annualized sales. So there are a lot of things to be excited about. Clearly there are risks. The geopolitical risk, the risk around the world, but so I'm a bit more optimistic than others are.
What about when rates start going higher in a sustained way? We are expecting the Federal Reserve to raise rates December 16th.
Correct.
Is that what you expect, and does that impact the business?
I do expect it. It'll likely be a quarter point from close to nothing to 25.
Does that do anything, a quarter point?
I mean, the debate's bigger than the rate. But even if that increase happens and some other increases next year. I think it'll have, those are short rates. It'll have a balancing of the curve or flattening of the curve, and I don't think it's going to in any way dampen demand for credit.
Okay.
I mean, there's always this belief that somehow you're going to kill the mortgage market. My first mortgage was at 8.5%. My second was 11, and I was lucky to get the money. I mean, if you're under age 40, you think 3% is normal. It's not.
Yeah.
But even if mortgage rates go up 100 basis points, that's not going to kill the mortgage
Look,
market.
I think that the markets would be really upset if the Fed did not raise rates at this point. People want to see that happening.
I don't know, but I believe it'll happen.
So loan growth right now, how is it? What does it look like? Where are the bright spots and the leadership in terms of loan growth?
In fact, we're today America's largest lender. We love helping customers. We love lending money. So autos are booming. Commercial real estate's doing very well. We had a pretty good housing season. Not perfect. We need to get more, but more purchase money business there. And the middle market, we're doing quite a bit of business there. So last year, our core loans grew almost 9%, which is a very good number.